You have and run ETF products. Where are people now putting their money given what's been happening, or are they pulling it out?
Good morning, Tom. Great to see you. Well, I think, the problem right now is that people aren't putting their money to work. I think that, what you see going on in the market after last week's CPI read and 2 days of a 5% pullback, coupled with some of the new data that came in, that 2 and 10-year inverting, put call ratios back at a sort of 0.89 level, S&P, NASDAQ, and bear market territory. I think that a lot of investors are actually sitting on the sideline and have some panic about the current market conditions. But, these are actually really great opportunities. As we always say, it's hard to call the bottom, but when you have a lot of these, check boxes ticking there on, bear market and looking closer there, these are great opportunities to get into, whether it's ETFs or growth names at lower valuations for investors that can lock up their cash for a while.
So, Tiffany, do you agree with Sylvia? Is this an opportunity? Does it create a dislocation enough where you can say, hey, maybe there's stuff I can buy on the cheap given what's happening right now, or do I wait for things to get cheaper from here?
Well, Don, in every market, there's someone somewhere making money. So there are clearly some opportunities. But, when I look at what happened last week, listen, there's just no eloquent way to put this. Like, last week was just horrible, right? And so most of us got knocked down. But, we need to think about what is the strategy going forward. And so you really have 3 choices. You've got buy, sell, or hold. And I can make a case for about 2 of those. And so when you look at the case to hold, and this is why, I know investors are probably sitting home and really panicking, and here's why you should not panic. So if you kept your money in the market, right, we can just look at like the past 15 years. So if you had like a $10,000 investment from December 31st to 2006 to December 31st, 2021, you would have had $45,682 right now. But if you panicked and took your money out of the market and you missed just only 10 of the best trading days of that time period, you would have $20,929. So almost less than half, right? So it really is time in the market and not timing the market. And yes, there are opportunities to buy, absolutely. So yeah, it's just a matter of what you want to do going forward.
So Tiffany, if I could follow up there, what then is the buy? You run an advisory shop. What exactly are you putting clients into right now?
Well, that's the question, right? And so, with so many stocks going down and declining, of course, there are opportunities to buy the things that you love, things you have conviction around at a better price. But what we like right now, because it's really hard to look at all that that red on the screen, what we really like are companies with strong balance sheets. We like yield also, but also companies that are in positive territory right now. So I'll just give you 2 quick ones. So Pioneer Natural Resources, PXD, it is an energy company. The estimated dividend for this year is 9.8%. That's a lot of yield you can pick up, and it's up 59% year to date. Also, ABBV, it's a healthcare company. It's up 5% year to date. I'll take that, right, considering last week. And then also the estimated dividend for 2022 is 3.9%.
All right, so AbbVie, 2 very different industries, AbbVie versus, healthcare, kind of biotech versus what's happening with energy. We know about the momentum in energy. Sylvia Jablonski, is energy in your mind still a buy, or has that 50-some% run from many of these parts of the market over there really made this an expensive place to be?
Well, I think in the near term, in the next couple of months, energy is going to look like a pretty decent place to be. As Tiffany mentioned, you're going to get some of the yields there. And, the story there for price of crude and commodities right now, inflation is sort of favorable to those companies. So I think in the near term, it's a decent trade. But longer term, especially if you're a young person and you're allocating to a 401k plan and have the ability to dollar cost average, right now you can buy just about anything. You can buy broad-based indices like S&P 500 and NASDAQ because they're, again, bear market territory, 20 to 30% respectively. But you can also buy growth stocks. I know that that's a dirty word right now, but the valuations are quite far down. You've got companies like Apple, Amazon, Microsoft, Google with loads of cash on the balance sheet, quality companies. They're part of every secular tech growth trend that's going to come. And you're really getting these names on sale. Again, you have to have that understanding that this isn't going to look pretty for months and potentially years to come. But I think that when you look at this type of market, these are the opportunities that you wish you would have sort of seized in buying equities. But like Tiffany said, I think if you're heavily invested in the market, holding is key. It's a big mistake to take your money out of the market and lose 20 to 30%. These things do come back, and it's painful and it's terrible, but unfortunately, it is part of investing in today's world.
Tiffany, just a couple moments left here. You get the last word. Does the Fed worry you this week?
No. I'm a long-term investor, so listen, this too shall pass. And just like Sylvia mentioned, if you are a long-term investor, this is just this volatility, these Fed moves, these Fed decisions, everyone kind of like anxiously waiting for what the Fed is going to do. I mean, we know what the Fed is going to do, right?
Sure.
It's all part of the game.